What is going on, everyone? Welcome back to another video. I'm glad to have you here. And in this video, I'm going to be teaching you RSI Divergence. This is a very powerful tool that you can use in your trading. I've done another video explaining how to spot a reversal in the market. I'll put the link up here. You can go check that out. But in this video, we're going to be specifically focusing on RSI Divergence, what it is, how to use it, and how it can really help you in your trading and find key points in the market. Also using exponential moving average, we're going to be focusing on the 50 EMA, and you're going to get a lot of value out of this video. So put your phone away, grab a pen and paper, take some notes. I'm going to be going through this, trying to make it a short video, but also full of knowledge, full of value. All right, so for this example, we're going to be focusing on the major pairs on the daily chart. I'm going to be going over divergence, how to spot it, how to draw it correctly, and what exactly is divergence telling us. So at the bottom of our chart, the first thing I want you guys to do is, if you have TradingView or if you're using MetaTrader or whatever, you can simply get the RSI indicator, which is the relative strength index. You can, in TradingView, you simply go up to indicators and you can type in RSI, and it'll be the relative strength index. So I'm gonna get rid of the TDI indicator for now. And then what we can do is we can go up to RSI, and you guys can follow along with this easier. So now that we have the relative strength index on our charts, we're just gonna keep it at the default settings. So we're not gonna change any of the parameters. So the default settings should be, the upper band is set to 70, middle band 50, lower band 30, and the inputs will be, the length will be 14 and the source will be close. We're going to keep pretty much the default settings that the RSI indicator comes with. So now let's break down the RSI indicator. What exactly is the relative strength index? So the relative strength index is more or less a momentum indicator. What it's showing us on the chart is overbought, which is above the 70 value, and oversold conditions, which is below the 30. What I mean by momentum is it shows the magnitude of which price has moved in one direction. So as you can see here, which I'll point out real quickly, you can see that price has moved up all the way with a lot of momentum, resulting in the RSI indicator pushing above the 70 value, meaning price is now overbought. Technically, it's overextended. What this tells us is that price may see a reaction, a pullback, relief, or a reversal, or just sideways consolidation. At the end of the day, we don't know exactly what may happen. Just because price is oversold or overbought on the RSI indicator doesn't instantly mean you can either sell it or buy it just off that one parameter. What you want to do is start adding extra confirmations that price may be ready to reverse or move in direction. So just to recap on that, the RSI is a momentum indicator, and it will show you the two extremes of either overbought or oversold conditions, basically drawn on this graph below. Above 70 value is technically overbought, and below the 30 value is oversold, meaning we may see price undervalued if it's below 30, or price overvalued if it's above the 70 value, meaning it may reverse, come off those points, or we may see some type of reaction in the market. Once again, no reaction needs to happen. It's just at the end of the day, it's just an indicator, and we can use that for our advantage to add confirmations and to get a bigger picture of what's happening inside the market. So just real quickly, when price does come up, you can see that it goes overbought above the 70 value. You can see the market has a bit of a relief, comes back up, it goes overbought, and then the market has a bit of a relief, and then it kind of just consolidates. So how can we use this to make better trading decisions? Well, now we can add in RSI divergence. Now what divergence means is price is doing one thing and the RSI indicator is doing another thing, usually the opposite of what price is telling us. So what I mean by that is you can see price is making higher highs. So we have our starting point, and now we have a new higher high. And then on the RSI indicator, you can see we have this high here, and then we have a low. So we can even bring this back over here just so we can use the RSI extremes. And now you can see that price is making higher highs and the RSI indicator is making lower lows. What that tells us is that change can happen. We may see a reversal, chop, or sideways movement. We never know what exactly is going to happen next, but this is another indicator we can use in our analysis to make better trading decisions. Going a little deeper into RSI divergence, what it technically is telling us is that price and the indicator no longer share the same momentum. Meaning, like I was saying before, we could see price react to these significant points in the market. Now, one thing I'm going to quickly do is turn off the 8, 21, 200, and 800 EMAs. And this leaves us with the 50 exponential moving average. If you want to add this to your chart to follow along, simply go up to the top, hit indicators, type in EMA, and then hit moving average exponential. Once you hit that, you'll be brought up with a box. You can simply click the cogwheel, and then you can go to inputs and type in 50, and that will simply give you the 50 exponential moving average. So I'm just going to delete that for now since I already got it on my chart. So now that we have a better understanding of what the relative strength index does and how to spot RSI divergence, I'm just going to go and find some more examples of how to draw it correctly and what to look for and how to spot it in any market. So in this case, we are on the daily chart on AUD USD. And if I just remove all this, all the drawings, once again, it's price action low to price action high to RSI high to RSI low, and that is bearish divergence. Bearish divergence meaning the RSI indicator is bearish, but price action is bullish. So when I mention bearish divergence, I mean you could see a bearish reaction, which means a short position price falling. With bullish divergence, which is more or less the inverse, we'll go find some examples in a minute. It basically means the RSI indicator is bullish, but price action is bearish, meaning we could see a buying opportunity. So let's quickly go back and I'll find some real-time examples. So we can see one right over here. Once again, this will all come down to chart work, spending a few minutes every day, 15 minutes, 30 minutes a day, going through any price chart and spotting RSI divergence, and you'll train your reticular activating system, so your RAS, to spot these patterns more frequently and much more easier. So here we go. Best to start on the RSI. So you can see the RSI is overbought over here. And then as price makes a higher high, the RSI does not make a higher high, it makes a lower high. Meaning we now have confirmed bearish RSI divergence. Price action starting point, higher high, RSI overbought, which is the high point, and then matching it with the price action, it is now a lower high from the price action's new high. So once again, it's the inverse. The indicator is doing the inverse of what price action is doing. If you guys have any questions, if I can explain it better, let me know in the comments below and I'll try my best to kind of clarify and come up with better explanations of how to explain RSI divergence. For me, in the beginning of my trading, when I came across it, this was one of the concepts of trading that I found very difficult to get a hold of. But once I came across Austin Silver with the AceFX systems, which are pretty much built around the D1 is built around RSI divergence, it came a lot more clear once I put in the chart time and know what I was looking for. So now let's go ahead and let's find an example of bullish divergence. Now I can see one set right over here. You can see on the RSI, we have an oversold condition, and then we have a lower low on price action, but we have a higher high on RSI. So if we connect those 2 points, so price action starting point to the price action lower low, now we have RSI low with the RSI making a higher high. Once again, it's the inverse of what the price action is doing. This gives us, once again, bullish divergence. So not bearish divergence. Bearish divergence is drawn on the top. Bullish divergence is drawn on the bottom. And bullish divergence simply means we are looking for a buying opportunity, and bearish divergence simply means we're looking for a shorting opportunity. With RSI divergence, you can use it for multiple different scenarios. I'm not going to go too advanced in this video, but I will release another video. So make sure you hit the like button, subscribe to my channel, and hit that bell icon so you get notified when I release that video. But pretty much you can use divergence to protect you in the market. So you can find points where if you are buying a currency pair and going long into divergence, you could be shaken out and the market could reverse on you. So it can help you protect yourself from trading opportunities that are just lower probability, and you can find pretty much RSI divergence everywhere. But now what I'm going to get into is how to take advantage of them and how to generate trading ideas and opportunities with RSI divergence. All right, so we are now going to go across all the major pairs and we're going to find trading opportunities just so I can show you how powerful RSI divergence is. Since joining AceFX and learning the systems and doing chart markups, back testing, even being active in the live market on the lower time frames, we can generate, I know from firsthand how well price action responds to divergence as a significant level. So let's go through the major pairs and let's find some trading opportunities and how we can take advantage of them. In this example, we're going to be using the 50 exponential moving average. This is kind of the bare bones and structure of the D1 system in AceFX that has amazing opportunities on the lower time frame, which we traded on the 1 minute and 15 minute. All right, so let's start with AUD USD again as our first example. We got our RSI high and we got our price action starting point. And then we have our new price action high. We connect the two lines and then we connect the exact same two lines. Once again, I'll draw it from this point here, since that is the extreme of the RSI. And then we connect the two dots. So essentially we are connecting this point and this point, the RSI extremes. And what that tells us is we may see a reversal, chop, or sideways movement. So we want to be prepared that what the market might be telling us so we can make better trading decisions. Now, how do we take advantage of what this signal in the market? How do we know what's going to happen? Well, this is when the 50 exponential moving average comes into play. I just want to take your attention to right over here. So this level in the market right here. What I want to show you real quickly, just to clarify what some of you may be seeing. I know there's some guys out there that can already spot RSI divergence within this bigger RSI divergence. So right now, let me show that to you real quickly. Once again, same concept. You got your price action starting point. You got your extreme of the RSI overbrought over here. And then you got your price action high. You can see if I bring this point over here, price action made a new high, but the RSI did not, which means we now have bearish divergence. Now, this is where it gets really cool and you might have some clicking points in your trading and some light bulb moments. Looking at the 50 exponential moving average, if I just zoom in over here, you can see price action never broke below the 50 exponential moving average. The 50 EMA is the bulls or bears last stand. It's a defense line where it's the bias changer, basically. If price breaks below there, then we could potentially start to change our bias from long bias to short bias. Because we are technically in an uptrend, price is making higher highs and higher lows, and it is respecting the 50 EMA at this point over here. Because it respected the 50 EMA, just because we have bearish divergence, I wouldn't instantly be shorting this pair. I would wait and see RSI build out. So RSI divergence can build out if you're on the lower time frame for hours, if you're on the higher time frame for days, weeks, months, depending on what pair you are looking at. So now that we have the 50 exponential moving average, price could not break below the 50 EMA with a body, just that wicked it a few times, which means it's a strong level of support. We come over here and you can see price broke below the 50 exponential moving average, created a lower high, made a lower low, and then you can see the market started to roll over and change direction. So you can take advantage of this in any market scenario using systems that repeat over and over again. With what I'm about to show you now with the AceFX systems, the D1 more in specific, this is how we more or less take advantage of intraday trading opportunities that present more or less every day, especially with all the pairs that we trade on the AceFX systems. So coming over to Euro USD now, once again, I want to point out to you RSI divergence, and I'm going to give you a quick minute to see if you can spot it. So if you're looking at this area over here, This is not RSI divergence. Once again, depends how you draw it, but if you're looking from this point up to this point, you can see, this is a good example to show you real quickly. This would not be RSI divergence here because the RSI made a new high exactly like price action did. So if I blow this up, you can see price RSI, and then RSI made a new high, and so did price action. But if you extended it to this high over here, and you used this level over there, then you can see price action made a new high, but the RSI did not. So I hope you guys are getting the concept of this. Once again, you can see price tried to break below the 50 exponential moving average, which it did. There was an indecision candle, market pushed up, fell over, and then we had some chop, so sideways movement, and then we saw a rollover. Once again, coming over to this point over here. Now, one thing to notice as well, with the RSI being oversold or overbought, it does somewhat affect the power of the move, the momentum of the move that could follow. If the RSI is overbought, like this example here, then we could see a stronger push down or up depending if it's bullish or bearish divergence. So in this case, this is bearish divergence, and the RSI was oversold twice, which means the market is very overextended, very overexhausted, and we could see a pullback, relief, or a reversal. Coming back to this area over here, you can see we have another set of bearish divergence. So just real quickly, since I'm being focused on bearish divergence, there is also a set of bullish divergence just over here. So once again, bullish divergence means you're looking for buying opportunities. You can see price action low here, and then we have a price action lower low, whereas the RSI is making a higher high. What happens? The market reverses. Once again, just because you see this in the market doesn't mean you want to be buying it straight away. You want to add multiple confluences into your favor. Once again, you can see it broke above the 50 exponential moving average, and then you could potentially look to enter and put your stop somewhere at the bottom, or however you want to test it and find what's profitable and repeatable in the market. So there you can see a set of bullish divergence, and then what happens? Price comes up, price makes a new high, we make a higher high, and then price RSI makes a lower low, breaks to 50, reverses. I hope you guys are getting the concept of the RSI divergence. It is a very powerful tool you can use in your trading to generate very, very profitable trading signals if you can stack them with different confirmations, such as a break of the 50 exponential moving average. Moving on to GBP USD, once again, you can see this massive set of bearish divergence from this point when the RSI went oversold on the overbought on the daily. Once like that, so price action starting point, price action higher high, then come to the RSI and match to 2 points. Price making higher highs, RSI making lower highs, and breaks to 50, falls through. So this is a great example now of why you shouldn't be buying it just because you see RSI, bullish divergence or bearish divergence. You can see that we have a very little case of bullish divergence, which means you may be looking for buying opportunities. You can see clearly the RSI is making a higher high over here and price action is making lower lows. You wouldn't simply place a buy or order like that. If you wanted to and you tested it over, let's say 100 trades, then if it was profitable, you could. But what we like to do at AceFX and what makes you more conservative and more profitable over time is waiting for a break of the 50 exponential moving average, because technically price could simply keep falling and it could keep building RSI divergence for days, weeks, or months, especially on higher time frames, or price could come up, reject a 50 exponential moving average and come straight back down and stop you out. So you want to be taking your time to add multiple confluences into your trading, not just buying it whenever you see divergence, because divergence is everywhere in the market, especially once you start to see it and you train your RAS to spot these patterns in any financial market. Moving on to USD CAD, once again, we have bullish divergence in this case. So price action starting point, price action makes lower lows, RSI makes higher highs. Breaks to 50, continues up, reverses. USD CHF, once again, you got the RSI. We'll look at the top here as well. So you got bearish divergence connecting price action. So price action starting point, and you got price action made a higher high. But on the RSI indicator, the RSI made a lower high, breaks to 50, continues down. Moving over to more recent data, you got price action making lower lows, RSI making higher highs, breaks to 50, moves up. USD JPY. Cool, here's another example of invalid divergence. So we have price action starting point, we have a higher high, but the RSI indicator is more or less even. So what do you do in that case? It is not valid. You got to set rules around it. From what I've experienced, this isn't a very strong signal, and you can see that price did break the 50 exponential moving average, but it came back up and never continued through. So this is just a quick relief or a pullback before the continued move in the uptrend. Moving on to NZD USD, and you can see, trying to spot some divergence. We currently have bullish divergence forming in current market. So we have price action starting point, price action lower low, RSI making higher highs. What you would look to do is wait for a 50 exponential moving average break and then potentially take a long position. Once again, test it on the daily. I do this on the 15 minute and 1 minute with the AceFX D1 systems. If you want to know more about that, I got the links in the bottom of the description box. You can go check out, and I also have a few other videos. You can go check out my YouTube channel to see exactly how they work. So there is a few sets of bearish divergence on NZD USD, and just to point them out to you for repetition, starting point on price action higher high, and you have, once again, depending how you want to look at it, this is clearly a lower low on the RSI. Once again, it's not if it's close. If it's not, it clearly is a lower value. So you got to have black and white systematic rules on how you define it. Breaks to 50, exponential moving average, retest, which is a higher low, and then it falls down, and then so on. So you can see how powerful RSI divergence is in the Forex market. I just went through the major pairs and we found pretty much divergence on every single pair, and we could also find multiple trading opportunities around it. Each time we had divergence that was valid, the market either reacted to it, chopped, or reversed. Having that knowledge in the back of your head when you do your technical analysis, knowing where you can find great entry points, such as using a break of the 50 exponential moving average, can really help you generate great trading ideas. So I hope you guys got some great value out of this video. I'm sure you did. I hope you took a lot of notes about it. What I encourage you guys to do now is spend half an hour, 20 minutes every day going through the major pairs or whatever pairs you want to trade, and try and train your eyes to see RSI divergence. It's very easy once you get the hang of it. All you are doing is matching price action and the RSI, and if the RSI indicator is doing the inverse of what price action is doing, then you have valid divergence. Once again, I appreciate you all checking out my videos and my content. If you liked the video, please smash the thumbs up button. Don't forget to subscribe to my channel and hit that bell icon for when I release new content. I appreciate you all being here, and I'll see you in the next video.